Okay, so in this video, we're going to talk about Bank of America stocks. So a few banks have reported their earnings. So I wanted to make a few videos on the whole banking industry, and you guys have been asking me to make videos on the big bank stocks to see what's going on here. So some of these banking stocks were some of the worst hit. Okay, so as you can see here, there's been a huge drop off, and there's been a lot of consolidation here. So people have been basically buying up the stock and giving it some support. So I want to tell you guys what I think about the earnings reports. Let's go right into the news release that talks more about it. So on CNBC, it says Bank of America posts a 45% decline in first quarter profit, braces for big loan losses. So if we go down here, we basically see the majority of those losses were that Bank of America set aside 3.6 billion to loan loss reserves in the quarter, following similar actions from JP Morgan, Chase, and Wells Fargo. Lower interest rates will weigh on the bank's net interest income, one of the main drivers of a lender's revenue. So as we take a look here, we can just basically see that they posted a pretty big dip in profit, a 45% drop, and that's basically what's been going on for the majority of the banks. But the one thing that actually did see a boost in revenue was, of course, trading activity. So let's just go into it a little bit more. So as we can see here, they saw their profit decline 45% to 1.9 billion, higher loan loss revenues, lower interest income. Wealth management profit fell 17%, and global banking profit was nearly wiped out as the company built larger reserves for commercial loan losses. Only the bank's trading division managed to post an increase in profit, a gain of about 33% to 1.48 billion, driven by greater volatility in markets and stronger client activity. So guys, one of the biggest problems with these banks is that since the Fed lowered interest rates, that's going to be a huge drop in their loan income. So that's probably something we're going to be looking at for at least the next 6 months to a year, or even longer than that, because if you guys, or any of you guys have ever been to Europe or you live in Europe, you're probably pretty familiar that the interest rates in Europe have been negative for quite some time now. So we finally basically hit zero interest rates, which is basically negative interest rates in the United States. So these banks are going to be seeing a big drop in net interest income in the future. So as it says here, it says lower interest rates after the Fed Reserve slashed rates last month will weigh on banks' net interest income, one of the main drivers of lenders' revenue. So, guys, yeah, that's definitely something that is not good for the banking stocks, and one of the reasons why a lot of them have been sold off. So, if we take, they talk about their balance sheet and stuff like that. So, let's just actually go into the actual earnings release. So as you can see here, guys, it talks a little bit more about what's going on in depth. So one of the things that jumped out at me the most for the banking stocks was simply that even though even though that a lot of economic activity has slowed up, Bank of America is still reporting a profit, and a lot of the money, a lot of the losses was basically a provision that they built up for credit losses. So my guess that they're expecting a lot of people to default on their loans. So that's definitely not a good sign. And as you can see here, average loan and lease balances in the business rose 57 billion or 6%. So a lot of people are definitely borrowing money. A lot of people are definitely relying on their credit cards now, because basically a lot of people are in survival mode. Perhaps they've been furloughed, perhaps they've been laid off, or maybe they didn't have a job to begin with and now it's even harder to make ends meet. So these banks are definitely going to see a huge increase in lending activity and defaults. Defaults is going to be a big problem, and I'm also kind of wondering if people are going to have problems with mortgage payments and stuff like that. Perhaps people will become upside down on their houses if we're really going through the recession as it looks like we are. So obviously the economic stimulus is going to help a lot of people, but a $1,200 payment isn't going to completely put these banks and everyone else back in a good situation. So as you can see here, he says our results reflect the strength of our balance sheet, a diversity of our earnings, and the resilience of our teammates to serve clients around the world. Despite our increasing loan loss reserves, we earned $4 billion this quarter, maintained a significant buffer against our most stringent capital required, and ended the quarter with more liquidity than when we began. So, as you can see here, another good sign is that it says we remain a source of strength. Our customers trust us with 149 billion additional deposits since year end, which enabled us to provide liquidity to people, small business owner, and corporate clients. We received nearly 1 million requests for assistance, and we announced a $100 million commitment to provide critical support to local communities. We are taking extraordinary steps to support our employees, clients, and communities during this humanitarian crisis. So, the good thing about Bank of America is that they're a pretty diversified bank overall, even though one segment obviously took a big hit, mostly that loan interest segment. They had some strength in terms of their trading segment as well. So, as you can see here, we can see here they had a huge increase and trading activity and revenue from their trading segment. So the good thing about Bank of America is they're pretty well balanced. And like I said, with this stock, this isn't a stock that you think you're going to have like it's like Netflix or Tesla or something like that. When you're buying Bank of America stock, you're looking for safety and you're looking to pick up the dividend. So the good thing about Bank of America is that they're doing a lot of things to help their customers through these tough times. And as you can see here, they've made a lot of different changes. So what this will do is this will help build brand loyalty, and a lot of people will stick with Bank of America and perhaps even attract new customers. So as you can see here, some of the things they're doing for individuals. You can request for funds for overdraft fees, non-sufficient fund fees, and monthly maintenance fees. You can request to defer credit card payments, refunds on late fees. Clients can request to defer auto loan payments with payments added to the loan, pause foreclosure sales, evictions, and repossessions, and no negative credit bureau reporting for previously up-to-date clients. So those are just some of the things, guys. I wanted to just cover some of the things that are kind of affecting individuals. So that's a good thing about Bank of America. I believe they're one of the better banking stocks out there, and I actually do own shares for them in my corporate account. I don't own many shares. I just actually have one, and I've held that share for a long time. I haven't really added to that position, but if I were looking for banking stocks, definitely Bank of America is one of my favorite ones. And Warren Buffett also owns a pretty big position in Bank of America stock as well. So I think that if you're looking to invest in banking stocks, I think you've got some safety there. Okay, so now if we take a look at the chart, let's get a kind of a smaller chart to look. Okay, so if we look at a little bit of a short-term chart, we can see that Bank of America was on a nice uptrend, and then when they reported earnings as here, there was a small dip down, but it's quickly recovered. I think if you take a look at what's been going on short, we're in like a small trading range, and Bank of America has traditionally been a stock that just hasn't had a lot of volatility. It's heavily traded, but it's basically a slow-moving stock. Like I said, you're basically there for the safety of the brand and for the dividend. So I want to show you guys a little bit of kind of what you're dealing with compounded annual growth rate when it comes to Bank of America. Okay, so I wanted to show you guys what the trailing returns have been over the last 5, 10, and 15 years to give you guys some idea of what's been going on with Bank of America stock. So as you can see here, the long-term trailing returns, also referred to as compounded annual growth rate, have not been very good. So as you can see, as a whole, banks in general have not been the best investment over the long term. Banking stocks have actually lost around 1% per year over the last 15 years. So obviously, as you can see here, 10 and also basically 0% over the last 10 years. So the good thing about Bank of America is that it is one of the better performing ones. It's actually performed pretty poorly over the last 15 years, but over the last 5 and 10 years, it's outperformed the banking industry on average. But the problem with banking stocks is that a lot of these stocks are very big and very mature, and there's definitely a lot of competitors out there. So a lot of people are using PayPal as a bank account. A lot of people are using Cash App and things like that for their banking. And then you've got also the competition with other companies that are developing their own financial fintech services, and not as many people are using banks like Bank of America as much, and that is definitely hurting, of course, their trading activity. You've got many competitors, Robinhood, Fidelity, all these different accounts, and even some people use apps like Stash Invest as a banking account. So the problem with banking stocks like Bank of America is that basically you're just investing for the dividend. You're not going to expect a lot of growth. So it really depends where you guys are. If you guys are much younger, if you're like a millennial or something like that, you're not going to see great returns owning Bank of America stock, as you can see here. And you can find this information on Morningstar. You just simply go to morningstar.com, type in the ticker symbol, and hit trailing returns. So I like to look at this information. Of course, I like to see if the stock is outperforming the broader market, and which is basically the total stock market, and I like to see if it's outperforming its sector. So for me, I'm not putting a lot of money in Bank of America stock. I prefer tech stocks, software stocks, consumer staples, things like that. But if you are interested in banking stock, I think Bank of America is one of the better ones. So what you're basically going for is you're looking for that dividend. So if we take a look at the back to trading view, we can see that the dividend yield is around 3.2%. So this is a nice stock. If you're looking for a banking stock, you want to collect that dividend. So if you guys out there are interested in reaching FIRE, financial independence, retire early, with this is basically a pretty high dividend yield. This stock will spit off income to you, basically if you're trying to retire early, or if you're already nearing retirement or already retired. 3% yield is pretty solid, and you're basically not going to lose a ton of money, but you're not going to gain a ton of money as well. So that's it for my analysis on Bank of America, guys. I'm going to cover some more banking stocks in the future. So if you enjoyed this video, give me a thumbs up and subscribe to this channel. I post videos on the stock market, stocks like Bank of America, Tesla, and other stocks every day. So please subscribe for more updates. And let me know what you're doing with Bank of America stock. Are you buy, seller, and a holding? Me personally, I think if you were to buy banking stocks, this is the time to do it. Most of these banking stocks have been oversold, I believe, and stocks like Bank of America are about 50% on sale. So if we're going to show you guys real. Okay, so we're back on that longer term chart. As you can see, the stock was just trading at around $34, around 21 bucks. So basically 50% on sale. I expect the Bank of America stock obviously to recover, as people are always going to need to use banks in the future. So guys, if you're looking for a decent long-term investment and you want to collect that dividend, you're not looking for a lot of growth, but you're not looking to lose money either. You're basically looking for as much safety as possible. Bank of America is a solid choice. So that's it for now, guys. I hope you enjoyed my video, and take care.